What is going on, guys? It's Wilkodation back with another video. Today we're going to be talking about my strategy. We're going to be talking about specifically my equity strategy and how I'm able to capitalize in the stock market. If you don't know, I do average about 28% per year in the stock market. These are picked through individual stocks. I don't trade any, right? I don't include any indexes in that percentage or S&P in that percentage. I am competing to beat the S&P 500 every year. So I do want to beat 12% every year. That is my goal, and that should be every equities trader goal, is to beat that 12% because that should be your benchmark. But let's go ahead and dive into my strategy a little bit. I'm gonna go over the indicator first, and then I'm gonna talk a little bit about FA, but this is more of a TA equity teaching on this. Just because FA, it is very hard to learn. It's not something that's super easy to learn. It requires a lot of attention to detail, especially when you're reading 10K sheets. So we're gonna be talking more about TA. FA is fundamental analysis, and TA is technical analysis, if you did not know that. Fundamental analysis is basically the fundamentals behind the company. Just like quarterly earnings, quarterly revenue, your balance sheet, your 10K sheets, all that fun stuff, your EPS, all that stuff, that's your fundamental analysis. And then your technical analysis, right, is your indicators, your drawings on the chart, supply zones, demand zones, ICT, whatever you trade, technical analysis, right? But we're going to be diving into my strategy on equity. So we're just going to be talking about TA for this video. So first and foremost, we're going to go over some stocks that I picked out over the past couple months that I've signaled in our Discord to start purchasing, to start dollar cost averaging in. And we're going to be going over, how much percent we've gained, because that's always everybody's main concern. How much are we gaining off this, right? And then we're also going to be talking about the indicators and how to use them properly. So let's go ahead and dive right into this. So first things first, we're going to be talking about the indicator that I use. So the indicator that I use for mid to long-term equity is I'll be using the RSI indicator. So RSI is Relative Strength Index. Now, it's very simple. Don't overcomplicate it, right? So when you pull it up, it looks something like this. It looks like it's following this, right? Because it does follow this. And then eventually, right, let's say the stock is spiking up. It comes to a point of where it's green. So this is anything over the 70 mark RSI indicator. Now, what that means is the stock is very overbought. If you didn't know, there's two key terms that people use for stocks, and when they're trading them, right, they'll be talking oversold or overbought or underweight or overweight. So this means the stock is very overbought. A lot of people are buying the stock. It's pushing the price up. It's driving the price up. It's most likely due for a correction, and that's okay, right? The stock market is supposed to pull back. Stocks are supposed to pull back. We're supposed to see pullback so we can enter new positions. Fundamentally speaking about this company, it's a great company. It's one of the biggest companies in China. And this is probably the only international stock I would invest in besides TSM, which is in Taiwan, the semi-manufactured conductor. They make the chips. But with that being said, I do stick to U.S. companies, but this is the only stock that I do invest in that's international. So as we can see from here, from the top up here, right, we had about in total, 32% pullback. When the indicator went off, it was about a 30% pullback. That's a great buying opportunity, right? Anything that pulls back, 15, 20, 30%, that's a major, major pullback. And it does present good buying opportunities. I wanted to buy BABA in this 75 area. Unfortunately, my capital was all tied up and it was going away. I was buying a bunch of stuff at this time. We had a lot of consolidation in the market, so I was picking out certain stocks that I thought would perform better, which they did. They performed well. But I did want to get into BABA around 70. That didn't happen, unfortunately. Right when I was about to buy it, we broke structure to the upside and we just started mooning. So I decided, okay, I'm not going to FOMO in, right? I'm just going to play patient and wait for a pullback. Finally, a month or 2 months later, we finally got a pullback in November. Indicator went off. So what did I start doing? When that indicator went off, I started doing something called DCA, which is dollar cost averaging. Now I'm purchasing this stock through this whole time over here. And keep in mind, this is the daily chart too. So this is about, unfortunately, this wasn't enough consolidation, right? But it is about 2.5 months worth of buying this stock every single day, besides this top area. I do cut off my DCA, so anything under $90 for me was my purchasing point. And I did buy a little bit up here under 100 as well too, so I bought a little bit of this too, just a little bit. So our average cost in this is 91.20. So just over the couple months, we've averaged 31.36%. Now, if we take a look, right, we always want to look at our benchmark. So our benchmark is, the S&P 500. What am I doing? Whoops, my fault. So we do want to benchmark ourselves to, right, the S&P 500, right? So if we take ourselves from November, right, even now, right? So it's right here, closed right here. So we're only up 2% with the S&P 500. So we're beating it there by a lot. But we have to see year to date, right? We always want to do year to date, but that's just for benchmark purposes. And then our next stock we're going to be talking about is CVS. So this is where, right, technical analysis does play into factor here versus fundamental analysis, right? Our indicator does go off over here at this 67 area. To me, I wanted to see more of a pullback personally. And if we take from the all-time high here, right, the $60 area, right, is a 40% pullback already. So me, I just want to play patient, and plus the healthcare sector, I'm not a fan of it. I want to get things on really, really good discounts if I do want to enter any positions with these companies in the healthcare sector. So we do dip down all the way 52%. So 50% off on this stock right here from all-time highs. Even at this bottom right here, this is a 60% pullback in this stock. This presented a great buying opportunity. So I capitalized on it, right? I'm going to take a risk here on CVS. We're going to see how it does, and it's doing really, really well so far. So as you can see, indicator goes off over here. It's indicating that it's oversold. We start dollar cost averaging. So I'm probably cutting over anything that's over $60 in this area, and anything under 60 I'm buying. So, it's fluctuating above this 60 over here a little bit. So, we can say we are purchasing for a pretty long period of time. This is all consolidation right here. And then we took a major turn to the downside. There was some major news. I want to say it was a lawsuit. I can't remember what came out. But when this happened, I waited. I watched it. And once it cut past this 52 area right here, I decided, okay, now, right, because we are DCAing into this stock, right? Let's just say we're DCAing $30 a month, right? And we're in this area right here. Well, usually what happens, right, if a stock pulls back like this is another 10% too. This doesn't look like a big pullback, but this, okay, so sorry, this is like, yeah. This is a 27% pullback in this stock right here. So, with that being said, that's a big, big drop. Now, how do you counter, right? The best way to counter something like this, right, is just to up your cost and dollar cost averaging, right? This is why it's always good to sit on extra capital and not just go, okay, I'm going to buy, 10,000 worth of CVS here, and the next thing you know, it sells off on you. But you could have averaged your cost somewhere over here. You could have averaged your cost down here and made your shares worth 46.37 instead of the 60 area. So all you simply do is you just up your DCA. You can do as you please, right? But for me, for example, my light DCA would be around $50 every day, and my heavy DCA is $100 every day into an individual stock. So, right, I'm buying $50 worth a day. When this sell off happens, we break this low right here. I step my DCA up to $100 every single day in this area. And this was about a month right here. We chilled down in this area right here. So this is all monthly, that or daily I'm buying this, but it's for about a month. So my average cost for this stock comes down drastically because I stepped up my dollar cost averaging to be lower. Now, with that being said, my average cost is around $50 in this stock, and so far, within these couple months, right, we're up to 27%. CVS alone today pumped like 15%, I want to say, right here, major pump from 55 to close at 63. Actually insane. That was another great purchase on equity. And then we're going to go over our last one here, which is going to be Boeing. Very bullish on this company. I've been so bullish on this company. So let's go ahead and just go over the indicator again so I could explain it. Whoops. So right here, overbought. What happens? Correction. We sell off. I wait. Because Boeing is trending down. I wanted to see somewhere around here in this area get taken, which we did. We did hit this 130, 135, 140 area, which I like for a good bounce here. But our indicator did go off here, and I was okay with buying this company at 167. Reason being, right, you always want to look at the bigger picture, right? Let's take the all-time high. You always want to look at the bigger picture. This is why it's important, right, to look at the bigger picture and zoom out. Another 68% discount, right? When we started purchasing it, it was 63% off. That's like going to your favorite, right, designer store, right? And they're like, all right, this is 60% off. Do you want it? Yes or no? The answer is probably yes, right? You have to treat the same way you treat that stuff, treat stocks. And I'm telling you, you will make a ton of money doing this stuff. So anyway, we pull back, right? Our indicator goes off a couple times. So we turn on our dollar cost averaging. And then we start pumping right at this level. And I figured we were going to get like a little push up. I didn't know if we were going to break out, but I figured we were going to get some push up here, which we did. So it's okay. I just shut it off, right? You have to learn how to shut off and turn on your DCA. You have to learn how to shut it off and turn it on. You don't want to buy high. You want to buy low, okay? So, stock trades up. We shut it off for a little bit, and then we come back down. And then this area, I started going heavy. I keep moving this thing, man. I started going heavy. And our average cost is around 151, 150, somewhere around there, give or take. And now, we're up 23%. So this just shows you how important this strategy is. It does work, but don't get me wrong, right? I don't think you pick a company you don't pick a company using technical analysis. You want to use fundamental analysis, right? Think about it like this, right? If a company reports negative, right? Let's just say a company reports negative net cash flow. You know how many investors are going to just dump that stock? Do you think your line that you drew on a chart that it bounced off 3 times is going to be respected because of a negative net cash flow? Probably not, right? Okay, this is why equity is a whole different ballgame. And this is why I use 80% fundamental analysis and about 20% technical analysis when I'm trading equity. And then our last look, right, we can take a look at Tesla. Like, absolutely crazy. I bought back here in 2023 at this 115 area. And then we immediately started pumping. So I was buying at this 115 area. I shut it off, right? Really good average cost. And then we came back down to this area and I started buying again. And we just kept accumulating over here, which is okay. I'm okay with accumulation because it gives me a chance, right? When you're dollar cost averaging, you're purchasing every day. So you want that stock. You want that stock to do this. You love when a stock does this, but if it's 50% off, right? You don't want a stock to do this. and then it's 50% off, right? It trailed down to 50% off, and then all of a sudden it just bounces off, right? And it starts trending up. You might get like 1, 2, 3, 4 days out of this. That's not enough time. So we like these accumulation periods. These are nice areas to start, right? Like right here, for example. This is a perfect example, right? Tesla dips down. I turn on my dollar cost averaging, but I buy for what? Maybe 10 days? And then it just moons back up, breaks up, and starts trending back up. We want accumulation periods. These are good for us, especially for dollar cost averaging people. Yeah, and this stock, I think my average cost is, I want to say 156, about right here. At all-time highs, right, it was 216%. But we're going to use year to date, right, 113%. And this is about from 2023. But I really started purchasing not too long ago in 2024. But other than that, that's all I have for you guys. I hope you guys have a great rest of your day, and I'll catch you guys next time. Later.